visit Bakersfield. I'm telling you, the prices shouldn't be going up. And in 2006, he sent another letter saying, by the way, now the average price is $300,000. And again, you must visit Bakersfield in order to understand why that doesn't make sense. Just too funny. Here's another thing that gives you a sense of numbers here. The report said only $1 trillion of loans made during this period do they consider to be fraudulent. I just like the word only 1 trillion. There's a lot of other stuff here.
Let's go into the IPO.
Does it say who is responsible for regulating mortgage-backed securities and point the finger at them?
Yeah, in terms of the regulation piece, keep in mind that the commission was established to make sure that no one would be blamed for anything, right? Obviously.
Can I point the finger?
Well, in a sec. So, so the commission found fault with basically everybody, which means kind of nobody. One other thing I noted here was profits from U.S. corporations from Q4 to the end of 2009 was $600 billion, which is interesting because those are actually, we think, oh wow, everyone was losing money. But the reductions in salaries by those corporations was $170 billion during that period. Really interesting. So before we go to the IPO piece, Ken, the telecom sector, this might be the theme, I guess, of what I'm talking about today is just kind of head scratcher stuff. So this from a Nokia CEO. The game, because their market share has gone from 45% to 30%, they used to sell half of all cell phones in the world. Somebody was asking him what's going on. He said, well, the game's changing from a battle of devices to a battle of ecosystems. Now, the funny thing is, I've heard that phrase used many times, and if he had said that in 2007, I would have said, yeah, Android's coming out. But no, he said that in 2011. I mean, the game is changing? Dude, it's changed. It changed like freaking 4 years ago. AT&T, another great phone company, they're losing their exclusivity. All these were earnings announcements the last couple of weeks, which I've been listening to. So someone asked AT&T CEO, so what are you going to do about the iPhone coming out? Well, we're going to be losing customers. Yeah, probably. But, we're going to change some things. So you wonder, well, probably better pricing. No, he didn't talk about better pricing. A better cell phone coverage? No. He referred at one point to there were isolated incidents of bad cell phone reception.
The whole United States.
Just on Earth. No complaints from Saturn. Just on Earth. But he did announce one way to hold on to their customers. They're going to institute higher termination fees. I mean, this is no joke. Time Warner, they lost subscribers, which was interesting, but revenues rose 5%. Of course, you know how the revenues rose 5%. They raised their prices, which is also great. They also added that they see no sign in the foreseeable future of consumers moving to broadband video services. I mean, come on. Netflix added 3 million subscribers last year.
You saw the Hulu thing in the Wall Street Journal, right? All around how it is a valid network now.
Yeah.
It's got enough numbers to where it could be its own company to rival the cable companies and the network.
Sure. Yeah. Well, on the so Demand Media, that went public this year or this past week. 1.8 billion market cap, something like that. That's a company that has taken a lot of arrows because it's quote a content farm. I will say this, having been in the internet and especially in the advertising area of the internet, everyone's a pirate when in online internet advertising. It's all pretty shady stuff. So to call out Demand Media is kind of, I think, a little ridiculous.
But remember where Richard's from. He's from Intermix.
Yeah.
Right? And Intermix was the godfather of that.
Yeah. What Richard did, which I find really, it's clever. So simple thing is Google ranks your pages based on how many links from other websites are linking to your pages. So then they can say, well, that's a proxy for popularity, therefore we'll rank you higher, unless you pay, of course, and then you get ranked higher anyway. So he started a registrar, he bought a registrar, and ultimately has millions of websites out there, which basically have a picture, not much else. But then he used those websites to link to his other good websites, which ultimately, since he controlled those links, rose the page rankings of things like eHow, and that's how he gets good coverage. But you know, that's the rule of how Google's algorithm works. So to say he's scamming it, he's just playing by the rules. Also interesting to note here that you know, large cap investments, at least in this case, paid off. 350 million went into demand media over the course of like 5 years, and at a $1.8 billion valuation, not so bad. A lot of late stage investors played in that deal. Also interesting to me that the investors were able to cash out. Usually in an IPO you can't. You can raise money for your company, but you can't take any cash out. So it shows there was actually a lot of interest in that IPO. LinkedIn also filed to go public, so they haven't gone public yet. Now their financials I think are very interesting. $160 million in the first 9 months of this year. So like a 220 million run rate, but that's double from where they were last year. Their revenue is very interesting. It cuts across 3 sectors: subscriptions, a plan for recruiters and in-house corporate recruiting companies, and then and advertising. So very solid revenue base. Profitable finally, like 10 million in the first 9 months of the year. Also interesting, I'm starting to see now every time a company's IPO is being mentioned, they refer to share post or second market. You guys familiar with those? Those are where private companies can exchange. So LinkedIn has a $2.5 billion valuation right now. That's what you'd pay to get their shares. It's actually a great thing because if you are trying to negotiate, which is how it works, a price for your IPO, you sit down with the investment bankers and they kind of tell you, this is what it has to be. It's always been, in my mind, rigged because they're telling you what they're going to sell your shares for. But keep in mind, what they're really trying to do is curry favor with their clients who they're selling their shares to. Also, there's something called a green shoe. One day we can talk more about it, but what happens is every time an underwriter gets your shares and takes them public, he also gets the right to buy 15% more of the shares for himself, and he gets 30 days to do it at the price of the IPO. So if the stock goes up, it's a guaranteed profit. Couple last things, Prada going public on the Hong Kong Stock Exchange, which I think is interesting because so much of their business now is China. We talked a little bit about Groupon in the past. There's a company that has been started that is now trading unwanted Groupon coupons, which actually makes sense. And then the Daily launching.
That's
Rupert Murdoch's new kind of Newsweek-esque.
$1 a week.
Yeah, the reason it's interesting, it's the first time Apple has instituted a recurring subscription model. So you sign up and it's $1 a week. And then Amazon reported its earnings, $12 billion in revenue and $400 million in operating income for Q4, but also mentioned that for every 100 paperback books it sold in Q4, it sold 115 ebooks. So it's an ebook company now.
Wow, that's awesome.
All right, Ken, that's it. Thanks,
All right,
guys.
one quick. Can I say one thing? You know,